Hi, Dean Jenkins with FollowMeTrades.com, and this is the market update for the week coming up of October 4th, 2015. Well, hey, can you say volatile? Man, it's been a little crazy. I talked before about, from like March of this year up until late summer, the market had been in what's called a channel. And you can see the back and forth movement here was pretty narrow. And it was actually kind of hard to make money in a market that's not moving. But then you can see it got more volatile and more volatile. And look, where we're doing now. If you just look at the extremes compared to where we were, it is really moving around. Today, today was a good example. You can see today a key report was released. It was the employment situation report, non-farm payrolls, and the consensus was that about 203,000 new jobs would be added to the economy, and the actual was much lower at 142,000, and that surprised people. And again, people are trying to anticipate how the Fed's going to respond to that data. And it's this weird good news is bad news is good news, through the looking hole, make your head kind of spin stuff. So, with the job situation being worse than expected, fewer new jobs being expected, people, are going, well, the Fed then maybe they won't raise interest rates, and so the market ended up rallying late in the day. It dropped initially and then rallied later in the day. And again, this is really volatile. Last week I drew this trend line, this red trend line, and I said, there's a couple scenarios that the correction that we're in, I still have a very bearish outlook. I think we're going down to the targets that I've been talking about before, but that there's this thing called an ABC pattern, and that could be taking place. So this could be, or sometimes there's more complex, A, B, C, D. So this one, this could be A, B, C, D, whatever. The key thing to watch is this trend line in the short term. If we go above this trend line, then odds are we're going to continue on in something like this. Now, I still think we will stay below this dashed green line here, which is at 17,568. If we go above that, then my whole thesis is wrong, and we're going to go on to make new highs, which will be fine. We can trade that. I'll have a new outlook, and we'll trade different stuff. I'm still making money on my trades, but it's better when your outlook's right. You can trade with the market, but that could happen. I don't think we're going to go above that line, but we certainly could creep up towards it. But eventually, I do think we're going down. Still, that's what all the evidence shows, and so that's my outlook. I think we're in for continued volatility. There's not much news coming up next week. I told you that this last week, the really important thing was that Congress would pass a bill, a temporary spending bill, so we don't shut down the government. Well, that happened. That happened midweek. Congress passed a bill. The president signed it. We have funding for the government out until December 11th, and then the argument will start again, and there'll be some more volatility and around that. But we've got funding. So next week coming up, there's not much scheduled news. There's not many scheduled economic reports coming out. Probably the biggest thing on Tuesday, there's an international trade report coming out. That matters. It talks about the global economy, so that may have some impact. But nothing until Thursday, when the weekly jobless claims comes out. And again, people are trying to parse out what that means and what the Fed's going to do. And then later at the end of the day on Thursday, the Fed's FOMC meeting minutes are coming out. Now, the big announcement out of that meeting has already been made. They're not raising rates in September. But the minutes of the meeting are coming out, and lots of analysts, there's people, their full-time job is to read those minutes and then try and interpret all the nuances of the wording and what it means. So that could introduce some volatility. So we'll just have to wait and see how it plays out. Will we get some volatility and break above this line? I think that will matter, like I said, and we could go on up into a kind of a bigger ABC thing like that, we'll see. Or we could reverse quickly and head down. I've got trades on both sides of that. I've got risk management, so we'll be fine. We can't predict the future. We can't predict what people are going to do, what the Fed's going to do, but we can read the chart and respond to it. And right now, the longer-term outlook, like I've been saying all along, is bearish, and we're heading down to these targets. I'll change the scale real quick. You can see them again. This is a weekly chart now, and again, these targets, 14,429 down to 1203. I think that's where this is going to end up. That's what the analysis shows so far. Here's the S&P 500. Thought we'd look at this just for kicks and refresh on this. Again, the targets for this, 1853 down to 1678. Basically in the same pattern. It's got the same trend line here. And if we break above it, I don't have it drawn, but you can kind of see it would be right here. In fact, I can take my pen and draw it kind of crudely. Right here. If we break above that, then we may move up higher again. I don't think we'll take out that dashed gray line. Let's look at a few more things just for fun. Here is gold. This is gold on a weekly chart. So every price bar represents a week. And this is the gold futures contract. And you can see we're down from a high up above $1,900 an ounce. Currently trading down here at 1136. So, a really substantial drop in gold. I've talked before that historically gold has an inverse relationship to the stock market. So when the stock market starts going down, it's reasonable to expect that gold would go up. And you can trade that with this ETF, which is GLD. GLD, you see it trades, a tenth of the futures contract value, but that doesn't matter. You can buy this just like a stock. You can buy shares in it, you can buy options, and it's moving proportionately to gold. So if the market really does continue down strongly, there's absolutely signs that this bearish downtrend is losing steam, and we may be entering into a bullish trend on gold. It's not there yet. There's some key levels that we would have to put in. We want to see this high here, and then this, and then a new high, and that may be evidence that a bullish trend is beginning. And if it does, it's got quite a ways to go up. It could actually be really good. If you just look at measuring where a retracement could go from current prices, it could go up into this zone here. Even if this is just a retracement and then we're going to go on and make new lows, we could see it get up into this range right here between these two blue lines, 147 to 138. So that's a nice gain. That's a 30-40% gain from where we're at. So that's gold, something to watch, and I'll keep updating that. The other one I want to take a look at is oil. Let's look at oil. Let me clear this stuff off the screen. Let's look at the futures contract first. Crude oil, as you know, again, the weekly chart on the futures contract, and as everybody knows, you're seeing it at the gas pump. All this, oil's been down. It's lost over half its price from a high last year of just over $110 a barrel, down currently trading at 45. So oil will rebound. We don't know when, and there's not evidence of a uptrend yet, but it will. It will recover. And again, that's maybe something that you could go along on as the stock market's going down. Where could it retrace to? Even again, if it's just a retracement in an ongoing downtrend, it could retrace up here to 65 to 82 dollars a barrel. Not good news at the gas pump, but good news if you're an investor, and you can trade this with an ETF as well, which is USO. So again, you see the exact same proportional move, different pricing, but you can trade this. You can simply buy shares in it, or you can buy or sell options for USO, which is the ETF for oil. So there's a couple of ideas. What's going on in the market next week? Again, not a lot of news coming out. So any geopolitical news is probably going to have effect and cause some continued volatility in the market. When the jobless claims come out Thursday morning, that'll be kind of a big deal, and there'll probably be some reaction when the FOMC meetings are released. But that's really it on the calendar, so it's really driven by unexpected news. So we keep our stops in place, manage the trades closely, manage risk, and watch the stories that plays out. If you like this video and if you really find it valuable, please go ahead and click the like button on YouTube. That helps the rankings. More people will see it, more subscribers, so that helps me. So appreciate if you do that if you like it. And thanks, and we'll catch you next week with the next update. Bye now.